Welcome back to, what is this? 36? 37? We don't even know
Somewhere
our
out
own
there.
episode, CJ. This is
No.
embarrassing. We don't even know our own episode.
We're
This
mid-30s
is
right now.
36 of Bearish podcast. We have CJ Wilson on. He was kind enough to accept the invite. For people that don't know you, CJ, just give them a little rundown of who you are, what you do, and stuff like that.
Yeah, so my name's CJ. I'm actually a software engineer based in Chicago here, but I spend most of my free time either looking at investments or putting out videos about investments on my YouTube channel. That's pretty much what I focus most of my time on. And yeah.
Now, did you like finish college and immediately go to software engineering, or did you do something before that, or what?
Yeah, I studied English and business in college, and then I graduated. And then after that, I kind of hit a pretty crappy job market and didn't really find anything that was engaging me. So I worked kind of various jobs. And then in 2015, I actually moved to Chicago to join a dev boot camp, which is sort of a boot camp for learning how to do web development and stuff. So that's sort of an 18-week intensive program. I don't think dev boot camp is around anymore, but I figured this would be a good place to, grow both my portfolio, and I think it's a really fun and engaging field as well. So that's sort of why I settled on this engineering thing for my full time.
Well,
yeah.
Logan's a software engineer as well. He works for Twilio. So
Oh, cool, man.
Yeah.
Use the product.
Yeah.
It's a great product.
Yeah.
Congratulations.
Thank you.
Hopefully you got some nice stock options there.
Yeah.
Did you, Lo?
Huh?
Did you get some stock-based compensation from Twilio?
Yeah. I might have.
That's actually sick. That's sick.
Yeah, it is.
Max, go ahead and ask. We're just going to ask you some questions. We don't want this to be like an interview. We want to, make it a conversation, but we do have some questions that we're curious and we're going to ask you about. So Max, go ahead.
Yeah. So, I mean, I guess that's because we know, like looking at your YouTube, you've done a lot on Alibaba. So we'll surely go into equities, but I want to start off with a little bit more of crypto side first and kind of touch that and see where your head's at with that. In your opinion, when you're looking at crypto, do you look at it and see it more on the level of the greater fool theory, or do you actually see some kind of value to it? Like, can you place a value to it, or is it so far out there that you kind of question what its value is and people are just buying it, hoping someone will buy it for a little bit more than what they did?
Well, I'll say that there are a lot of people that are a lot more intelligent than I am that are very successful in crypto. I mean, the creator of Ethereum, for example, is a brilliant dude. He obviously understands that a little bit better than I do. I honestly don't spend too much time looking at crypto. I think one of my first videos on YouTube was actually doing a little bit of a dive into Bitcoin and sort of the pros and cons. A lot of my exposure is through the lens of Warren Buffett and Charlie Munger, which I'm sure all of you are familiar that they think it's kind of crap. I'm not sure that I completely buy that. But I honestly haven't done sort of the work necessary to get comfortable in putting any meaningful amount of my net worth in it.
Yeah,
I think oh, go ahead.
No, you got it.
Oh, it seems to me that the sort of the underlying technology, the blockchain ledger, seems to be very valuable, and it's just I don't know what applications it could be most useful. I really wouldn't invest in gold, and that's kind of where I see Bitcoin now. That might be as the store of value type of situation. Yeah. That might just be a misconception on my part. So I wouldn't invest in gold. So I probably wouldn't invest in Bitcoin either for that same reason. But I'm always open to having my mind changed about it, for sure.
Right. You always hear people saying like, "Oh, it's a hedge to inflation," or whatever it may be. And a lot of people say, well, the blockchain is the next biggest technology. That's what's going on. And it solves a lot of, issues that we run into on the daily basis. And I was just wondering from a software engineer perspective, maybe you had a little bit on that and maybe you were into it, but it seems like a lot of people have the same kind of mentality about it of, you know, it's kind of so far out there, and a lot of people like make their life about crypto, and it seems like a community that is really, if you're in it, you're full blown crypto, and if you're not, like you're not with the program with them.
Yeah, everything I've seen from them, the people who are the true believers in it will never sell their Bitcoin, for instance.
Exactly.
So that's that's powerful for that particular asset. That typically, if it's seemingly there will always be a buyer for it. So,
Do you know?
Yeah.
Do you know a YouTuber named and what's his name? Andre Jick. Do you know who that is?
I've seen his videos. I've never talked to him or anything, but
Yeah. So he had a video about Bitcoin, and he was adamant that it was going to $1 million a coin. And I watched, I watched these people, this channel called Everything Money. I don't know if you know who they are, but they went into like a deep dive of the actual math that went into if Bitcoin went to $1 million a coin, and it would be bigger than the global economy. So the crypto people are very far-fetched in their ideas, but like Max said, you cannot change their mind. And like you said, no, they're not going to sell the Bitcoin. It doesn't matter what price it goes to, they will not sell it. It's like very similar to a cult. And that's really what turns me off from it. And I just can't be bothered. And just the simple fact that the technology is way over my head. I just can't understand it. And we talked about this before. We've said we don't know what the intrinsic value of crypto is. And the only thing I can think of that will determine the intrinsic value of any kind of crypto is the cost of mining, right? Because every time you mine one, it gets harder and harder to mine. So maybe that has a impact on the value. But other than that, it's the greater fool theory, in my opinion. You're gambling. What's your take on that, if you have one?
I've definitely sort of been straddling the two lines. I mean, I have one leg in the greater fool camp and one leg in the, oh, this could actually be something, because I'm not gonna count it out. That's pointless. It's not helpful. I don't need to necessarily spend my time on it in order to, you know, make money, but that doesn't mean that there isn't value there. And one thing that is interesting to me about the whole Bitcoin thing is the potential for increases in green ways of mining, so that it's actually potentially helpful in that regard, where it's actually forcing innovation, because people actually want this mining price, as you said, to go down eventually. So, yeah. But as far as the greater fool theory, I think we have seen some patterns of that in a lot of cryptocurrencies. Dogecoin, don't want to call it out, but I have to. I think that seemed a little bit ridiculous. Not really a lot of merit there.
That's actually a good transition with all these cryptos skyrocketing. I had a question regarding FOMO, and when you see things rocketing up like that, and you know, friends are telling you how much money you made, and some people get jealous. It's just a natural feeling. How do you combat that feeling of FOMO and saying, you know what, I'm okay with missing this. It doesn't really bother me.
Well, one thing I've tried in the past is to, you know, if I am feeling that, I'm okay with, you know, having a little bit of a gambling pot, maybe put 1% of the portfolio or something in, you know, for instance, in GameStop or something. It's not illegal. You probably are going to lose money, but if you want to have a little fun, I don't really have any problem with that. But as far as putting a meaningful amount of my net worth in something like that, really, if I can't assess, if it's not producing cash flow, basically, I can't assess the value of it, and I'm not comfortable putting any money in it. And that's sort of just ingrained into my brain. That was sort of the first exposure to any concept of investing, was that framework. And so luckily, the first seed that gets in your head is usually the one that sticks the hardest. So
yeah, that's a great point, because I think in the past year, investing as a whole has been kind of skewed, or maybe a different light has been shed on it because of the GameStop debacle, and March and everything bounced back so quickly that people saw it. And I'm sure if you look at statistics, I haven't looked at them in particular, I'm sure a lot of investors have gotten in the past year and you don't know which one of these guys are when they're talking in these forums or anything or speaking their mind about what they believe in. You don't know if they've been in the market for years or if they've been in the market for 2 weeks. And a lot of it has been skewed on just, oh, this is it's a rocket ship going straight up and I'm going to hop on it. And they don't know anything about the fundamentals of the company, and a lot of it has been based around squeezes and short squeezes, which I'm sure that's the first thing that these new investors have learned about is, oh, what's a short squeeze? It's happening right now. This is GameStop right now. This is AMC. And then they base their whole entire market perspective of where's the next squeeze and how do I get into it? I think it's what
That's
a
their
lot of is
research.
going on.
Yeah,
Exactly.
they look
Great
up
point.
the heaviest shorted stocks because me and Max did that.
At one point we fell into that category of what is going to squeeze next. Let's get onto it. But thankfully we've kind of bounced back from that a little bit.
Yeah, if
But
you
yeah.
if you went onto Wall Street Bets during any time during the GameStop run up, you would have
100%.
learned a lot about gamma squeezes, or at least different interpretations of what these types of squeezes are. So Wall Street Bets during that time was actually fascinating. I didn't really pay attention to it, and then I went on there, and man, some people are pretty wild.
Yeah.
But yeah,
It's a great
you
way of
can't just
putting it.
base your entire investing philosophy on something that some other person on the internet is saying.
And I think that's what a lot of people have done at first. And it's almost like, that's why I think now more than ever, investing has been trading has been interchanged with the word gambling, because that's literally what it was. No one knew what was going on with these companies, but it's like, hell yeah, I'll throw a large percentage of my net worth of this, not knowing whether it's going to go up or go down. But I've heard whatever on Wall Street Bets said it's going to go up. So let's throw our money at it. It's interesting
Yeah.
to hear it and see it.
It's similar to what Jared said about FOMO. It was almost a period of about a month there. It was just all FOMO. It was this guy showing you a screenshot of making tens of thousands of dollars and then saying ride GME to the top, and you're going, okay, all right, GME it is.
Sold me.
Yeah, that's it.
But
and then
like,
as soon as GME dipped, it was like AMC to the moon, hop on.
Yeah.
And you're like, all right.
it's such a strong feeling as well, especially the jealousy aspect. You're like, damn, like as selfish and or as bad as it is to say, when you see other people making money and you're not in that stock, you're like, son of a bitch, dude. Like it
Yeah.
makes you mad to a certain extent. But did you guys hear that, my dog, or no? You good?
100%.
Okay,
I heard
cool.
it. Yeah.
All right.
Love dogs, yeah.
Anyways, before we get into any other stock talk, I want to ask you, how did you or when did you get into investing?
So I graduated college
Yeah.
and worked for a few years. Then decided what I was doing wasn't really going to be the long-term play for me. So then I actually have a friend who started his own fund in college. So he's been working his ass off for almost a decade now with his own fund. And he graciously, I reached out to him and said, I'm not happy. You seem to have control over your life. What are you doing? I didn't even know about investing or hedge funds or anything of that nature. And he basically took me under his wing and he said, read these 3 books, which were Poor Charlie's Almanac, Zen Mind, Beginner's Mind, and no, those were the 2 books. And read those, come back to me, tell me what you think, and go from there. So I read the books, was really interested in, there's no better introduction in my mind to investing in general is through Charlie Munger's point of view. So being able to read that as my first investment book was pretty much a godsend to me. So then he basically took me under his wing and basically put me through a boot camp of investing and gave me stacks of books, told me how he reads through financials, things of that nature. So yeah, that was kind of the spiel.
So after reading those books, it sounds like, am I correct in saying that your process of finding a stock and buying a stock is based largely on the kind of giants of investing's fundamentals? And like, how exactly do you go about when you find a stock, and how do you research into it, and what makes you actually click the buy button?
Yeah. I want to preface this with the fact that I don't think that any time is wasted when you're researching individual companies. So a lot of people will say, okay, look at the price, and if it looks undervalued, then go ahead and do a deep dive into the company. What I'd much rather do is get a firm understanding of the fundamentals of the actual operating business that's going on. Because then if I don't have that understanding, then I'm not going to be able to put any sort of, potential growth numbers to their free cash flow or whatever the case may be for the company. So I like to dive into the actual business. And even if it turns out that the business seems to be fairly valued or overvalued, you come away with that situation with a better understanding of at least one business. And then you'll have models to look at other businesses that are similar. So I just wanted to put that out there. So I'll dive into the operating business. I try to find as many write-ups as I can. There are a lot of brilliant investors, especially on Twitter, sometimes on places like Value Investors Club and things like that, that give pretty good synopsises of the actual business. And then once I've done that, then I like to go on, recently I look on Ticker, but I also like Morningstar.com. And I look at some of the key ratios. I look at the balance sheet. I'll look at the income statement, and then I'll take a look at what the cash flows are looking like for that. And then usually, not always, I go to the 10Ks and I like to read back at least a few years. I think Buffett says you're supposed to read 10, supposed to, as in you'll be able to tell if the management is following through on what they're saying in one letter to the next, and if the business is actually sort of evolving in the way that was anticipated in the past. So it's useful in that nature. What would get me to click the buy button? That's a good question. I like the line from Pabrai. He always says that he's trying to get to know as quickly as possible. He's a more mature investor than I am. So like I said, I'm trying to understand business models still. I mean, he probably has every single business model filed away in his brain, but I'm not that smart. So if I think that the business can maybe double or triple in 5 years, then that, if the cash flows are going to seemingly grow at a rate that will get me at least a 10% return, I'm happy with that. So. Yeah.
So then a follow-up question that you've explained what gets you to click the buy button. It's the fundamentals, it's the financials, it's looking into its 10K, it's really understanding the business. But that's pretty concrete. But on the other end, what exactly gets you to sell a stock? I feel like that's a lot more mental and not exactly concrete. What when you have made an investment and it's gone in your favor, what tells you, okay, this was the percent return that I was looking at, or this is enough, now I'm ready to walk away?
Selling is the hardest thing, for sure.
Exactly.
I'm really bad at fully selling out of positions, to be honest. I have a few in my portfolio that are just kind of sitting there as really low percentage bets that I've sold down on. I think either the two main scenarios would be either the fundamental story of the investment thesis has changed. Say, for instance, there's going to be supply chain issues permanently impaired or something like that, then you just kind of have to cut your losses at that point. That one's a little bit more easy to sort of make the decision on, because you're probably not going to get your money back. And it's better once you know that you're wrong, just to cut losses and not play that hope game. And then the other is opportunity cost, I would say. Right? It falls under the umbrella of opportunity cost. So if I see maybe Alibaba sitting at 150 and I have a stock that I think is possibly double of what its intrinsic value is, not saying that I have anything like that, but that's a time where I might take a look and say, okay, I need to sell down a little bit in this. But on the other hand, I'm not a professional investor in any case, and I have an income where I can constantly feed into my portfolio. So selling isn't actually something that I've worked on too much or had to do too frequently, because if I have a position in mind, they don't come around all that often. And hopefully by the time that I find a new position or a new company that I want to take a position in, I have that cash buffer because I've slowly been feeding back into the portfolio. So that's a little bit of an easy out on the sell side.
Yeah, it's just interesting to hear someone else's perspective, because I'm sure we've all been in it where we maybe hold on to a position for too long and it's done what we wanted, and then we hold on to it way too long, and then it's completely reversed and it's lost a substantial amount of our gains. Or, you know, you sell it and then you check back in on it a week and you're like, damn it, it's up this amount now. Why did I do that? And then maybe even it's the jumping back into it real quick, or, you know, whatever it may be. It's just, it's interesting because it's such a mental game, and I don't think there's a concrete answer to it. It's just, you know, can you be mentally strong enough to really just get out and stick to your guns?
Yeah.
Yeah.
I've always found that interesting as well. I think it's hilarious. Kind of going back to like the GME or all those YOLO things where you'd make like a 200% on your original investment, take it out, and then see it go up some more and still find a way to be mad, even though you just made
Right.
200%. Doesn't make sense.
No, it doesn't. That's the hardest part. And not many people talk about it. Like everyone talks about buying and nobody talks about when do you sell a stock. That's like not a thing that you see. It's all personal. Like you
Yeah.
said, CJ, if you can find a place to allocate that capital like at a higher rate of return, then that kind of makes it easy for you, right? But if in a market like this where there's very few options, what do you do? Because you don't know if it's going to keep rocketing like it has been, and you don't know if it's going to go down. I guess this is like with timing the market, but what I mean, like in a market that's at all-time highs, your options are so limited. You just either keep it in there and hope it doesn't crash on you, or you take it out and hope it doesn't keep going on for a very long time, because then you're sitting in cash for too long. It's hard. It's weird.
Yeah.
guess-
In a market like this, I don't know how familiar you all are with Nick Sleep, but he's sort of famous for holding three positions. I think it's Amazon, Costco, and Berkshire Hathaway, about maybe 70 or 80% of his portfolio. And his whole thing is, if the business is continuing to get better, even if it's overpriced, then you should still hold on to it. And I think that sort of makes the selling decision a lot easier. But that also has to come from a place of you buying really high quality businesses. It's not going to work for a business that is going to revert back to the mean. You have a 50-cent dollar that's going to revert back to the mean, and you have to keep track on it, daily or something. That would be a lot harder.
Didn't he close down his fund because he just told his investors to just buy those three companies?
Yeah, that's the story.
He had those three companies and he was like, you know what? You guys can just keep the fees. Just do this.
And then when you get rich enough, you don't want to have that pressure probably
Yeah.
of
Right.
holding on
That's
other
true.
people's money like that.
Yeah.
That's funny. Must be nice. Yeah.
Yeah. Hey, someday,
Yeah, exactly.
I'll go Max, because now that we're talking about individual companies and stuff like that, are you I'm not gonna go into your portfolio, but are you comfortable with talking about Alibaba?
Sure. Yeah. I'll
Okay,
give it a
'cause-
shot.
All right, because when I was in this past summer, I was down in South Carolina with Max, and I saw how far. I didn't even know Alibaba dropped, like, because they dropped last October and they just kept on falling since. I didn't even realize till this summer, and I was like, oh my God, they're down 40%. And I was watching so many YouTube videos on it. I was reading their annual reports. I was just doing all this sort of research, and then it just kept on dropping. And I was like, I think I'm going to buy in, because I have my Excel spreadsheets and my intrinsic value calculator and stuff like that. And it when it reached, I think my initial buying price was like 212, and then it hit 180, and I was like, all right, I'll buy back in again. And then it hit 170, and I'm like, okay, we'll just keep on going. And then it hit 150, and I'm like, motherfucker, dude. I'm down 20% or whatever it is, and I just kept buying back in. So I don't want to ask you when did you buy Alibaba?
My initial buy price was probably similar to yours.
Yeah.
But my most recent purchase was last week, I think.
So when it hit like
It was
153,
160 or something like that. Yeah. Something around there. Yeah. Too cheap. That's all.
yeah. And I told one of my friends that I bought into it, and he's a very, he does out of the money call options. That's all he does. And He's telling me he's making a killing and everything, and I'm sitting here down 30%. And I'm like, maybe he's right. But he was like, hey man, you sell Alibaba yet? I'm like, what, bro? He's like, yeah, you bought at 212. It's at 150. You sell it yet? I'm like, no, dude. Like, it's weird how some people don't understand the concept of long-term investing. Like, he just has no grasp of it. It's just, if it falls, cut your losses. I showed him my spreadsheet and stuff, and he was like, yeah, but it's only worth what someone will pay for it. And that kind of made me mad. I was like, bro, you don't know the history of the stock market if you think that. So I'm rambling, but what was the deciding factor that, okay, I'm okay with the risks of China. I'm okay with what they're doing. I don't think it's going to be here 5-10 years from now. What was the deciding factor where you were like, all right, I'm buying Alibaba?
Well, I guess there were a couple. Number one is Charlie Munger owns Alibaba, and people can deride him till the cows come home for buying Alibaba and then the stock immediately going down. That's nothing that hasn't happened to every single investor. And so that's a huge vote of confidence. Charlie Munger is probably maybe the smartest guy that I've ever had the experience of learning from. I know that's maybe a little hyperbolic, but
He's up there.
Yeah, the dude's a genius. And then we saw a ton of other investors, all these super investors, the value investors, Moshe Barai, Guy Spear, Tom Rousseau, tons of dudes that have been in the game for so long and really know when is the right time to swing. So I don't mind bowling with bumpers, as Moshe Barai would say. So taking these guys' great ideas and rolling with that. So was happy with that. The price at the time when I bought in seemed like it could have doubled, within a reasonable amount of time. So I was happy with the expected rate of return. As far as dealing with sort of the regulatory environment, nobody knows what's going to happen. I definitely don't know what's going to happen. And all of my information comes from other investors or other analysts, people on the ground in China. I don't know if you follow Lillian Li or Rui Ma, or they're these wonderful Chinese analysts, and they have an actual understanding of this common prosperity regulatory. I don't know what you would call it.
Yeah, I know you're
downfall. And the media is sensationary. So the media is uncomfortable with a single party system, regardless of the fact of the prosperity that they've had. So I think what's good for the country as a whole is probably going to be good for the company as well. Now, again, now I'm rambling because there's a lot to sort of juggle here.
Yeah, no, there is. You're right.
Yeah. There's a lot of uncomfortable things. Most recently, they've had that tax. It's not a tax.
The 15.5 billion donation.
Yes, the donation.
Yeah.
That's in my mind. I've sort of settled on it as thinking of it as an extra tax that is going to roll back into the Chinese economy.
Right.
And if it actually works, who's going to be the beneficiary?
It's
going to be Alibaba. Yeah.
Right. Yeah.
So I don't know. Well, sorry. Go ahead. No, I don't know. I'm just saying. About that.
This is a big difference with this stock as opposed to other stocks going through an event, if you will, is investing with Tom said this. He said this is the only time I've seen like a government related event as opposed to like a company related event. Like this is the only time I've ever seen politics do this to a company. So I guess. Like you said, it can be uncomfortable, but I think Munger is the one that said, or Pabrai is the one that said that Alibaba is like China's like golden gem. Like they're not gonna do anything to really hurt them.
Alibaba is a really difficult puzzle if you're looking at it from a 1 year time frame. If you take the lens of 10 or 20 years, I think it becomes less problematic. And that's, a lot of investors don't actually take that approach. So that's just one thing I might note.
Yeah, so you kind of touched on it a little bit right there, and I think it kind of answers my questions, but I'll still ask it anyway. What are your views, I guess, on using leverage in terms of like a smaller amount of money that acts as or is as powerful as like a big amount, aka options? You know, like for something maybe like Alibaba, and you're in it for the long term. Do you kind of shy away from maybe using I'm not talking about the weeklies or like the monthlies. I'm talking more about like maybe like a leap position in
Mhm.
terms of a year out, 2 years out, 3 years out. What would make you, is it the expiration date that would shy you away from maybe putting like a time limit on it that would shy you away from using that and push you towards shares? Or maybe are you a little bit more open to using some kind of leverage in terms of options?
Yeah, I think I I've experimented with leaps in the past, especially I think the past position that I did with was Warren Buffett and IBM. So I got burned there.
Yeah, as
That didn't
options
work
do
out.
sometimes. Yeah.
But I don't think there's anything wrong with it. I just honestly I prefer to keep it simple. Having options and having an expiration date makes makes the loss of capital more seemingly more readily permanent, you know. So I'm okay to hold the position for 10 years, and I don't think I need to juice it, but I don't see anything wrong with it from, you know, anybody's perspective. I don't think I'm smart enough or
Yeah.
attentive enough to do the leaps or the options. The one option that I might consider doing is selling puts, I guess, because I like when the price goes down. So that might be the one. I don't have any experience with it, but that's the one that I kind of
Right.
would probably
Did you
use.
do that on Baba?
I considered it, but I have not done it. No.
It's
Yeah,
funny you even brought that up because we were literally just talking about selling puts on,
Right.
because I think Phil Towns talked about it, and Jared can speak a little bit more on this, but
Yeah.
basically selling a put on something that you wouldn't mind buying, and then if you're assigned, you now own it at that price that you were comfortable with owning it at.
Right.
Mhm.
And if you don't get assigned, then you keep the premium. It's like a win-win scenario.
Yeah.
Yeah. Logan, do you have any questions? We're rounding third. We're running out of questions.
I'm interested to talk to him maybe off camera about what he does software engineering wise,
Okay.
but I don't know how
Alright.
important that'd be for this
No,
this
I
video.
think I have one more question for you, CJ, and then we can chill off air and talk for a little bit if you have
Yeah.
time.
Yeah, sure. Yeah.
So my last question is, and if you don't want to say it, then don't say it. What are some stocks on your watch list that you're just waiting for the price to be right? Like top
Stocks on the watch
5,
list.
top 3 favorite, just like please hit this price so I can buy you.
Yeah, I'm kind of bad with the watch list thing. Yeah, I don't actually have a legitimate physical real list of companies. But I would say things I'm considering buying maybe is a better way for me to phrase
Okay.
this.
Yeah.
I'm considering buying Tencent or
Another
Prosus.
Chinese company. Yeah.
Yes.
Yeah.
It's literally the backbone of daily life in China.
Yeah.
And it's another one of these global footprint companies with investments all over the world. Very unlikely that the government will try to do something that's going to impair that company, because if they impair that company, it's going to impair the everyday citizen. And if that's what they're actually trying to, you know, lift up, then that would be bad news. So Tencent, wonderful company. Nintendo, maybe the second most valuable IP in the world besides Disney. But you know, that's just the fanboy in me talking, because I'm a Nintendo diehard, so I'd be happy to own that company. Another company might be, if Facebook ever drops down near the $300 mark or maybe less, then Facebook starts to get really, really interesting. And then one more, let's say Micron. I don't think I need to wait for that company to drop anymore. I think the price is pretty attractive right now. So
yeah, Micron is one that Pabrai and Spear own. It's just I don't really understand. For me personally, I don't understand the memory or anything that has to do with chips or anything like that. But it's actually funny you brought up Nintendo, because I was looking at Nintendo as well. And what I like to do is I like to go on YouTube and search up Nintendo stock valuation, not to like, that's my only type of research, but that's actually how I found you, is when I looked up Nintendo and I watched your video and I was like, holy shit, this dude is sick. I was like, this man knows what he's talking about. So yeah, Nintendo would be cool. My biggest thing with them is it fluctuates so frequently and so consistently based on their newest console. You know what I mean?
Yeah.
So that's my only thing with them. But so you got Nintendo, Tencent, Facebook, and Micron, and then Prosus.
Yeah.
Okay, not bad.
No. I think it's a good handful of names to keep everybody occupied.
Yeah.
But the thing with Nintendo, just real quick, is that this time it's different. That's the investment thesis.
Uh-oh, that's scary.
So,
Why is that? Why is that?
Go watch my video on YouTube.
That's like something. That's like something
well
you're
done.
not supposed to say. This time it's different.
No, I know. It has to do with the Switch being the only console versus Nintendo splitting their time between, say, the Wii and the DS. They have split resources for two separate consoles. They also now have an online system that's aggregating your information, keeping your profile, keeping your games that you own. That's going to hopefully keep you locked in with this network effect with their Nintendo Online subscription. They're continually iterating with the Switch. So it's sort of like an iPhone where you upgrade every once in a while. But those are some of the key points, I guess. But I can send you a really good write-up that helped me with that video, by the way. So I'll send you a write-up on
awesome.
Nintendo and Micron that I found really helpful for understanding.
All right.
Yeah.
Sounds
I
good.
You
guess
can
to
link
kind
it
of
if you want. Yeah.
to round this out, to finish this up, a lot of our viewers are very, very new in the stock market. Barely even we did one of our first videos was if I'm correct, how to buy a stock. Literally walking through how to buy
Really
a stock.
important. Yeah.
No, and it is. It's the
Very
fundamentals.
important.
Yeah. Well, somebody DM'd us and said, "Where do I go? Like, how do I buy a stock?" And you don't
And
just go on Google.
It was a screen recording of Robinhood on Max's phone.
Literally. That's how fresh a lot of our viewers are. And I guess it's a cliche question, but if you had to give just a few pieces of advice for the newest investor, someone who just something you wish you knew when your buddy told you, hey, this is what investing is, now go read these books, what exactly would you say to them just to start to get them familiar with it and actually kind of understand where to go, what to do, and how to go about it?
Okay, the first piece of advice is, I don't know if it's the most important thing, but for me, think of yourself as an owner of the business that you're buying into. So if you're going to make your own startup, how would you operate in your own company? And what do you want to see the operators of the company that you're going to buy into do for the future prosperity of that company? So just keep that general frame in mind before you first start. You're buying into a business. You're not buying just a piece of paper that's going to go up and down. Then secondly, think about a few books that I would recommend. I wouldn't say start with The Intelligent Investor or Security Analysis or anything like that. Those are the Bibles of value investing, but they're actually not that approachable. I would say look at books like The Warren Buffett Way is a super concise and informative book to learn about value investing in particular, and Poor Charlie's Almanac. So I'm never gonna not recommend that as my number one investing book, and it's more helpful in learning about how to live a good life as well, not just how to make money in stocks. So those would be some of the pieces of advice. And okay, one more piece of advice. Sorry.
Good.
Don't wait to get started. You won't learn how to invest until you actually click the buy button, because most of investing is, like we've talked about a lot through this podcast, how you react in situations where the company is fluctuating up and down. The mental game is more important than almost anything else in investing. So learn how you're going to react, and that will inform you how you should probably form your investment strategy going forward, I would say.
Yeah. I think
There
that's
you go.
a great piece of advice. It's a mental game, and on top of that, when you actually click the buy button, that's how I learned options. I lost a shit ton of money because I said, I'm okay with losing this money. I just want to know how this
Yeah.
thing works.
Yeah.
And I just kind of watched how it moved and what happened to the option price. And you kind of learn by literally just jumping in head first. I think
Yeah.
that's a great piece of advice.
All right, guys. Well, thanks for listening to episode 36 of the podcast. As always, you can reach us at Insta, TikTok, YouTube Shorts. We've got a separate channel just for shorts on there. If you want to get in touch with us the quickest, definitely Instagram DM. If you want to start fights in the comments, like I always say, TikTok for sure. That's definitely the best way. And then CJ, if you'd like to plug your YouTube, go ahead, man.
Yeah. I'm sure you guys will be leaving a link in the description, but
Yeah, for sure.
go check out my YouTube channel. I talk about individual companies, general investing concepts, personal finance. If you want to learn alongside me, that's kind of the goal. So yeah, please subscribe. Thank you.
Cool.
There
And
we
like
go.
you said, that link will be in the description, guys. So again, thanks for watching, and we'll catch you next time.